This is very, very important for the underwriter to take a decision on underwriting the risk, knowing the possible maximum loss. Okay? So this is about risk measurement. Now we move on to risk control, the third aspect of risk management. So risk control means this is where we get into action of trying to reduce the probability of the event happening, trying to minimize the loss. Through risk control measures, we achieve these two objectives. Right? What is risk elimination avoidance? There is the first aspect of risk control is risk elimination or avoidance. How do you eliminate a risk? How do you avoid a risk? When you know the various issues pertaining to a risk, there may be a possibility of avoiding the risk. Let's say you want to avoid the risk of going out on a two-wheeler for shopping and meeting with an accident. It's a risk. It can happen anytime to anybody. You want to avoid that. How you can do that? Simply sit in the house, order your groceries online. So it will be delivered to your house. You are avoiding the risk of going out on two-wheeler. You are eliminating the risk altogether. Right? Then how do you eliminate the risk of landslide to your house? You ensure that you are not building your house on the slope, hill slope. Ensure that even if the landslide occurs, your house will not be, you are avoiding the risk of landslide. How do you avoid the risk of fire? You ensure all your electrical fittings in the factory are intrinsically safe, what they call. To avoid short circuits, you have to use every electrical fitting that is intrinsically safe, explosion proof. When you use these fittings, you avoid to the maximum possible extent fire accidents. So when you apply your mind, there is always a possibility of eliminating or avoiding the risk. But that may not be possible always. There is always risk in spite of the fact that we are trying to avoid risk. Okay, by not going outside for shopping, I may feel that I have avoided the risk of road accident. But what will happen when I am sitting in the house full day, when the fan falls on my head? That is again a risk. Okay, so risks cannot be fully eliminated, but maximum possible extent one can reduce the risk, avoid the risk, eliminate the risk. Now when we talk of reducing the risk, this is the second step in risk control. First step is elimination or avoidance of the risk. The second step is minimization or reduction of risk. We accept, yes, there is risk, it is not possible to avoid. Now how do we minimize the risk? The minimization is by taking suitable control steps. When I go out, I have to go out by two-wheeler. Then how I can minimize the risk? I wear my helmet. Then I follow the road, the rules of the road. I do not overspeed. I avoid the road that is having a lot of potholes. Take an alternate route. All these things are possible. They are a minimization of the risk. Okay? Still risk is there. We are not eliminating the risk. The risk is there, but we are minimizing the risk by various means. After the minimization, still there is risk. Now here question comes, whether the risk is acceptable to me or not. If the risk is acceptable, fine, I live with the risk. Then what I say is, the risk is retained. This is risk retention, part of the risk control measure. If the risk retention is not acceptable to me, then what do? I have to transfer the risk to somebody. That is, I find somebody who will take the risk on my behalf. The risk is there. The risk is not totally eliminated. It is not completely minimized. Okay? It cannot be retained because it is not acceptable. Then now I have to find a person who will take the risk on my behalf. Right? This person is the insurer. what he says, okay, I will take the risk on your behalf, you pay me a consideration for that. Why should I take your risk for free? It's not possible. So you pay me a small consideration, I'll take the risk. Now what I do, I weigh my possible loss due to the risk and the consideration I have to pay for transferring the risk. If my loss is very heavy and the consideration is paltry, very small amount, then I will be interested to transfer the risk to that person and pay the consideration. Now this consideration is called insurance premium, right? The person who is accepting the risk on your behalf will manage his risk, and when the claim comes, when the loss happens, he will indemnify or pay the loss amount to the person who paid the premium and took the insurance policy. Right? This is how transfer takes place. Now, from among all these issues, when we are talking about risk, this is the point where the interface between insurance and risk takes place. Risk transfer. Insurance is nothing but risk transfer for consideration. Right? The people who accept the risk are the insurers. Right? The people who transfer the risk are the insureds. Right? The amount paid as consideration for transferring the risk to the insurer is called the premium. So these are the various things. So risk control, we have seen 4 aspects. Number 1, elimination or avoidance of the risk, if possible, desirable. Right? But it's not always possible. We have to take the risk. Now once we have to take the risk, we have to see whether we can minimize the loss, that is, reduce the possible loss from the risk, and what all steps we have to take. We have to figure out and take the necessary steps to reduce the loss. After reducing the loss, still there is risk, and we have to see whether we can bear the risk ourselves. If we are able to bear the risk ourselves, it's well and good. We become our own insurers. And this particular aspect has an important bearing for whatever we are going to discuss in future, but I will make a small mention of it. When you become your own insurer, there is a possibility of getting into trouble, what is called underinsurance, when you are dealing with fire insurance. Okay? So we will leave it at that this risk retention may cause underinsurance problem, and we will discuss in detail when we deal with the fire insurance at a later date. Okay? So what happens once whatever residual risk is not acceptable for us, what we do, we transfer the risk to the insurance company.